Risks of Global Collapse. It's a pleasure having Seppo Corpella, Professor Emeritus at the Ohio State University. Good afternoon, Professor Corpella.
Good afternoon, Armando. Nice to see you again. How
Nice
much
to see you
how
again.
much oil have we used since we saw last?
Yeah, that's a good question. Good question.
3 billion barrels.
3 million barrels. Yeah,
Billion.
billion barrels. Billion. Sorry, billion.
100. Yeah. Let's see.
Yeah, 100 million per day.
100 million per day. Yes.
Yeah. Yes.
So 30 days, it's 3 billion.
30 days. Exactly. Yeah.
Yeah.
Seppo Corpella, many countries have unpayable debts.
Hmm.
Money used for to finance growth or sometimes spending more than the capacity they have, sometimes financing wars. The case of Argentina, Suriname, and also the USA. Uh, could this growth of debt be a threat to stability? I mean, it can contaminate and get out of control the system.
Yeah. Yeah, for sure. Uh, but let's start with the little review of this oil business
Mhm.
first. There's a slide which uh, is based on okay, this is what I was going to talk about: the some oil topics, and then the economy and how it's related to energy, and then
Mhm.
renewables, and then wars about natural resources, and so on.
Okay.
So uh, if you look at the oil slide,
Which slide is this one, guys?
no,
No, no,
yeah, that one.
that one.
Hmm.
Uh-huh.
Well, this London bank, HSBC, it used to be Hong Kong Bank. They produced a study in 2016 based on two independent researchers. One is a Uppsala group in Sweden, and the other one is U.S. Geological Survey. And they drew these conclusions from these studies that 81% of the oil production in the world is now in decline, and uh, and the decline rate is about 5 to 7% in these fields, which means that from 3 to 4.5 million barrels per day will be lost every year. And by 2040, the world needs to replace 4 times the Saudi Arabia production in order to just stay flat.
Mhm.
Now, the world depends increasingly on smaller fields. The size is about 75 million barrels. So that's a not much, right?
Mhm.
We're using 100 million barrels a day, and these new fields are 75 million barrels. And then and they of course decline faster. Exploration success year 2015 was only 5%, with the average
Mhm.
discovery size 24 million barrels. So that's pretty sobering results which they've been obtained from that study. So you have a next slide on oil?
Maybe this one.
No.
No.
Okay. Okay. Let's go there. Okay, that's fine. But I was going to mention that just that the Uppsala study mentioned that the world's oil there are about 50,000 fields in the world, and 30,000 of them are in the United States, for the reason that the United States is a very old oil province. Okay,
Mhm.
then out of those uh, out of those 50,000, 500 just 1% of the fields, they produce about 50% of the world's oil. So
Mhm.
as we discussed in our previous chat here, that we are completely dependent on these large fields, which many of them are now depleting. Okay, now to tie this into economy is that without ready available cheap energy source, the economies cannot grow anymore. Now, the economies of the world, each country, basically every country, it's based on debt. It's interesting that this should be so. Because if you think about the money which is in the economy, there's something called the base money, which is the currency and reserves at the central banks. And from there, you lever these things to in such a way that commercial banks are able to create money into existence by issuing loans, and this increases the money supply. But they're limited how much they can do because of the reserve requirement at the Federal Reserve, at the central bank. Okay, about 84% of the money which is in the economy is created by these commercial banks. Okay, so of course, when the loans are paid back, then the money supply decreases, and when you get new loans, the money supply increases. Now, there's a concept called a velocity of money. Okay, it's a ratio of the price of all commodities, price of all the things which are paid times the transactions during a year. Okay, so notice that price times transactions, it has the units of dollars per year. Okay, and then in the denominator is the money supply, so that those are dollars. So the velocity has the units are similar to like meters per second, because it's a denominator is year. So that's why it's called the velocity of money. Now the question is that the typical economics books say that the velocity of money is constant. Okay, and the question then is that why does this velocity money of change? Well, it would change. Let's say that first of all, the economy works like this: is that I buy something from a customer. I mean, from a supplier. The supplier makes a little profit. If I'm a retailer, I sell it to a customer. I make a little profit on that thing, and on it goes. So everybody makes a profit, and the system works until you come to the end, which is those people or companies which produce raw materials, that is steel, smelt steel, and discover oil and so forth. They don't have to pay the supplier anything, because the mother nature is the supplier. So these are the gifts of nature to human societies. Okay. So now so that's in a kind of like a well operating economy. But if for some reason now the money supply becomes too large, for example, by too many debts, then and if the gross domestic product doesn't increase because you cannot produce more product with a debt may only go for some I don't know. I mean, a lot of it's wasted, to tell you the truth. It's malinvestments. So anyway, the velocity of money goes down. Okay. So now, if you go to the next slide.
Sure. Is that the chart? No. This one?
Yeah, exactly that one. Now, this is a graph of the velocity of money from 1900 until today. Not quite today, because actually it's gone up a little bit the last 2 years. But the interesting thing is this chart is from a book by a guy by the name of David Webb, who just put it on the internet about a month ago. It's called The Great Taking. And he tried to explain that this system is completely unmanageable. And in fact, he's claiming that somebody is planning a controlled demolition of the economies. Now, one doesn't have to agree with it. But this one is produced by a company called Hoisington Management Services. And if you can see, from about 1900 to the beginning of the Great Depression, the velocity of money kept going down. And then now the same thing has happened from something like 1997 until today. The velocity has gone down even faster.
And was exactly faster.
So the question basically is that, is this a signal of some troubles ahead? Okay. Now, David Webb thinks it's a signal, and it seems to me also it's a signal that something is going wrong in the whole system. Now, so Irving Fisher was a Yale economist who wrote in 1933, he wrote a little pamphlet called the Debt Deflation Theory of the Great Depressions. Okay, so now the question basically is that we have gotten so much debt that if you try to deflate it out, it's going to lead to conditions of a Great Depression. Okay, and in that booklet, he has some graphs or tables where he discusses how the velocity of money kept increasing in certain increments as we moved along in that thing.
This is the data for the global money. It's not specifically for the United States or not.
This one is United States.
Oh, okay.
Yeah.
Okay.
But the similar things happen everywhere. Okay. So now, if you pay attention to I mean, I read this book by Peter Merberg, I think his name is Merling, Percy Merling. It's called The New Lombard Street, and he basically tried to. One statement stood out to me in that book where he said that if you think about economists, they tend to look in the past and see how the economy has progressed and try to construct some laws and some tendencies from that progression. Then there are the financial people who are trying to look into the future because they want to invest and see what the return of the investment is. And then in the middle, there's a group of people, very few, by the way, who are interested in looking into the so-called plumbing on how the money moves from one entity to another in this system. And as we saw during the great financial crisis in 2008, is the conduits of money froze up because banks lost a trust in other banks, and all of a sudden the money did not move, and that led to the whole thing freezing up. So basically, the piping got plugged up, and nothing happened. Okay.
But the past does not guarantee the future, so it's only patterns can be analyzed.
Yeah, I think that's right. It is a pattern, exactly right. But you know there's no guarantees. There are only probabilities. But the tendencies are such that I'm kind of thinking. And by the way, right now on the internet in these various talk shows, there are a lot of people. Financial people who talk about this stuff is that what's happening. I am not the financial guy myself, but anyway, the interesting is that the last March when the three American banks were teetering on bankruptcy, the Silicon Valley, First Republic, and I think it's called Signature Bank. The Federal Reserve, the Treasury opened up a window to help them, and they poured in like $65 billion into those banks to support them. And sure enough, the system got stabilized. But now we say that okay, no banks are in trouble anymore. But if you look at the statistics from the Federal Reserve Treasury website, you can see that they've been this system has been drawing more and more money. It's right now 130 billion already, but we have not heard anything about banks going bad. By the way, yesterday there was a bank which was going bankrupt in China, a very large bank in the Chinese shadow banking system. Okay, so. So now the question then is that I mean what is going to happen here? Now the Federal Reserve if they issue, Treasury issues these bonds, U.S. Treasury bills, and so forth, and basically they are bought by everybody in the world, and it's the largest bond market in the world. So basically, the Federal Reserve seems to have also the responsibility to keep the whole world system intact. That is, this comes as a result of the U.S. dollar being the reserve currency, right?
Yeah, right.
Well, it has obligations, and it has it can be used badly. When you look at the last financial crisis, the money given to many European banks by the U.S. Federal Reserve in order to make sure that things did not freeze up. And then if you look at who are the primary dealers of these U.S. Treasuries, among them you have at least a couple of banks in Switzerland, French bank, there's a German bank, there are two Japanese banks, and then American. I think there's one Great Britain too. So basically, they are selling these bonds throughout the world. Okay, and then now the question basically is that we are starting to talk about this de-dollarization of the world's economies, as we well know. And the question is how fast it's going to take place. It's been taking place for some time. Okay.
Yeah, that's right. There's a comment from Phil, because their money is tied to the US dollar.
Yeah. So now the thing is that the next there are two other issues which seems to bolster the dollar in the world, namely
BRICS.
Namely, what happened is that during the Great Depression, there was a law passed in the United States called the Glass-Steagall Act, also called the Regulation Q, which separated the kind of like the investment banks from savings banks and so on. And what happened was that that law limited the amount of interest the bank could pay its customers in the United States. Well, the result of that thing was that these banks, they established sister companies, daughters, subsidiaries in Europe, and then they left their money in Europe in their banks because they could pay higher interest and so on. This system is called the euro-dollar system. Okay.
They capture money because they put interest rates higher.
Higher. They capture the money. Exactly. Yeah. This is the euro-dollar system. Now, the euro-dollar system grew fairly slowly initially. I mean, it started, like I said, in 1933. It went fairly slowly for a very long time. And then, of course, came the petrodollar system as a result of the oil embargoes in the 70s. Okay. Now, people tend to concentrate only on the petrodollar system and say that okay, because countries the oil has to be bought in dollars, so that one people have to go to the forex foreign exchange markets to buy dollars, and that props up the value of the dollar. But now, if you think about it, is that the world oil market is about $2 trillion a year. Now, in the meantime, this euro-dollar system has grown to the size of $80 trillion a year. And this has to be, about $80 trillion have to be, let's say, refinanced, these loans and so on, a year. So it's quite a bit larger than the petrodollar system.
But are there productive money? I mean, they receive this money and put to produce something, or only to speculate?
Okay, if a Brazilian company wants to build a a factory in Spain, he can go to a French bank and say, okay, I want a loan, but I want it in dollars. And I want to build this factory. Now, why would they want it in dollars? Because the currency, it's such a large amount of currency, it doesn't fluctuate much. You don't have this risk, currency risk.
It's the reference. Yeah.
Yeah. So it is productive money. It's the same kind of thing, money loan into existence by these banks. Okay. Now the world currency markets, forex, foreign exchange markets, they are $8 trillion a day.
A day.
A day.
Oh, it's impossible.
No. Yes.
It's too much money. $8 trillion
World
a
currency
day.
markets are $8 trillion each day.
Wow.
And about 80% of that is US dollars. So now the question is basically is that the thing is that well, okay, I mean, why is it? I mean, that's what the reserve currencies are about. I mean, it's kind of quite remarkable. Okay, so the point is that the petrodollar system is not that large of a part of a thing. Okay, now we have the situation where Russia has been selling oil to India, and they've been able to get it back in rupees, right? Well, after they have a certain pile of rupees, what is Russia going to do? What is the Russian central bank going to do with those rupees? Well, sooner or later, they're going to go to the world's forex markets and convert them into some currency which they need.
Yeah, no doubt.
And dollars. And okay, China and Russia, they have recently announced that they're not going to trade anymore in dollars. And that one would work because they have complementary kind of skills.
Demands, yes.
Demands, yeah. That China can sell all the widgets to Russia, and Russia sells the oil.
Yeah, right? But limited to the exchange between them.
Yeah.
Only, yeah.
Okay. So now we come to this BRICS issue, right?
Right.
Okay. Now, how is this going to work? I mean, we cannot go back to the gold standard idea. You know, at that time, you know, there were these gold in these vaults, and all the international trade was finally conducted in gold, and you know, people had to leave the gold standard because they had no gold in their vaults anymore. Okay, and the whole system broke down. Now, I mean, I've read that this BRIC system is going to use some kind of a basket of resources.
Yes.
To do it. And what I mean, how is that going to work? And I mean, are these resources going to put into some kind of vault? No. Yeah. They're going to be in the ground. But okay, if they are in the off the campus basin in Brazil, they are there, and they can be taken only if Brazilians agree to it, or if they come and start the war. You know?
Yeah, that's right.
Yeah.
So
I don't know how this BRIC system is going to work.
Probably they are planning to have a common currency among all countries part of the BRICS, and I don't know how does it work, but
they need to develop a central bank for that currency.
Yeah, that's right.
Where is the central bank going to be?
Yeah, to print money.
Yeah. Well, I don't think it's easy to switch to another system. And by the way, in some ways, if this happens, if we create a lot of chaos in the financial markets and so on, but manage somehow to blog along, I think the world trade is going to start going down. Which, from my point of view, when I look at the destruction of industrial civilization, is a positive thing, because people will get by with local produce and so forth.
Yes.
People will not want to shop from overseas.
Outside, yes.
Yeah, yeah.
But the debts are the same, so you can use this currency or a different one.
Okay, but okay, we had this kind of a system in place in the 1930s before we moved back into the gold standard for a while, and you had bilateral trade agreements and so forth. But it was very cumbersome, and the world trade did not move as easily as does today. Okay,
Uh-huh.
but I agree with you. It can work, and it has worked in the past.
Uh-huh.
Now, the problem with the again now the problem with the United States regarding this world reserve currency is that the United States made a great mistake at the start of this Ukraine war by let's say freezing the assets of Russian banks.
Yeah.
And by the way, these assets are now in this digital form in those institutions of companies which David Webb discusses in his book, Euroclear system and stuff like that. These are digitally stored in this depository what do you call them? Depository corporations and clearing corporations, securities and clearing corporations. Yeah,
Security.
and you know, they are private, those things, and their capitalization is not that large. So that's what David Webb is worrying about, that, you know, what happens if one of these goes bankrupt, you know, and stuff like that. And they are in charge of this huge derivative complex around the world.
Yeah.
Okay.
Perfect.
So the thing is that it was a great mistake by United States to freeze those Russian assets, and now there's even talking about that they would give them to Ukraine for rebuilding Ukraine and so forth. But if you start on this path and you have a reserve currency, what is the next country going to do? They're going to do the same thing. I mean, it's going to lead to complete chaos in the whole markets and so on.
Yeah.
So that's about all I can say about this economic picture, well, financial picture.
So you see that de-dollarization is a big challenge because 80% of the money in the world is dollars. This is the point.
Yeah, right. But the thing is that the euro has increased over the years, and then also Japanese yen has increased, and now yuan, but they're still very small. But
Yes,
I'm saying that it's going to take a long time for this thing to change, in my view.
To be a significant part.
I blame that because we're going to run out of oil in the meantime, then the other kinds of things which are going to happen in the meantime. So I don't know. I don't really have a strong view of how this de-dollarization will work out in the future.
But this chart is very impressive because you see a different pattern at the years 2020 and so very clear going to the index one, and this is the dangerous part of the story.
And if you look at what happened in the 1900s to 1930s, you know, it is jagged. So for a while it went up and then went down and stuff like that, but the trend was down.
Yeah.
I mean, now it's been more clear, the downtrend. Yeah. But I don't know if this tells the whole story about this, what's going on. But at least it's some kind of a signal which reinforces the view that there are some things going on, and we are in trouble.
Using as you mentioned oil and let me move a little bit to energy. So expensive and insufficient energy transition, sometimes more dreams than reality.
Yes.
And intermittency require more. Each time we need more and more dispatchable energy to cover the lacks of the wind and solar. that are not stable, fluctuation.
Right.
So this is something, the energy challenge may be something that can be a factor of losing control, or the world
Yeah.
has a crisis. Yeah.
Yeah, the way I've thought this thing through is this: is that if the economy, if the wheels don't come off the economy, as we get into the declining fields in oil and particularly naphtha, as they keep going, we're gonna get into some kind of a recession and depression sooner or later. But if the entire money system breaks down, then we're going to have a more sudden collapse, and then we get into a Great Depression like in the 1930s, and then we'll wonder why we can never get out of there. And the reason is that we don't have a ready source of energy to get us out of there. That's the way I look at it. But the thing is that which comes first, I don't know.
Yeah.
I actually expect that this money system is going to blow up before the we're going to be in real trouble with energy.
Before the energy systems collapse.
I suspect. I mean, we have been waiting for this money system to collapse since 2008. Now, it's a very long time. We have been putting band-aids on it and so on.
That's a good vision. Yeah, right. At
But
the same time,
like I said, is that this diesel is the most important thing. Still, is that if you could not bring produce, I mean, material into supermarkets, food stores, and so forth, what would happen? How long it would take that all the green produce would disappear from the stores? 2 days.
Yeah. 2 days. Wow.
2 days. All the greens, they don't have inventory. You can't have inventory on that stuff.
Yeah, that's right.
Yeah. Then all the foodstuffs, maybe by 4th day, they'll be all gone. Empty shelves. Now, what would happen by the end of the week? All the garbage would be piled up on the streets. If you have no garbage trucks, no diesel oil for garbage trucks and stuff like that. So this diesel oil is the weakest link in the system, because particularly, well, in the United States, I know that most of the stuff is carried by trucks.
Yes, that's right. In Brazil is totally by trucks. We do not have rail trains, only a little.
Well, I mean, United States has a lot of this coal transport that goes by trains, because there's a lot of coal in the western United States, and it's hauled all the way to the East Coast. So now the question is that if you look at the renewables, okay. Hydro is about what did I say? Yeah, hydro is about 50%.
50? No, it's too much.
Hang on, let me see. Is this? I think this is from electricity production.
Okay.
Because hydro is used for electricity production.
Yes.
So 50% of electricity production comes from hydro. About 9.2 comes from nuclear. Wind is around 1%. Biomass is about 2.3%, and solar is 0.1%. They're about 27%, and all the rest of it is from coal and natural gas, a little bit of oil. Okay. So now the question basically is that when you start from a small base, like wind and solar, how scalable are these things? Well, not very well. They don't scale very well. I mean, people talk about that things are growing at certain percentage a year. Well, if you have one unit or something and you get another one, you've grown 100%.
Yeah,
but
that's right.
But as you have 1,000 units and you grow by 2, it's only 0.2%. Yeah.
Yeah.
So the thing is that these percentages, I mean, the press writes these kind of articles to make people feel good and so forth, but I don't think they can be scaled up.
Yeah.
And
Yeah.
you know these wind turbines, they're not let's say simple machines. I mean,
No,
each
no.
wind turbine has about 8,000 different parts, and they
And the
last about eight.
mining of minerals and
Yeah, yeah.
earth.
But I'm talking about just the wind turbine itself, you know.
Yeah.
But the thing is that yeah, you have to get these materials from somewhere, and
China.
yeah, well, you know, yeah, you can get these things, but you know the steel, uh, as far as metals are concerned, over 90% of all the metals processed in the world have been steel.
Uh-huh.
Okay, so the thing is that we have these small things, you know, cobalt and niobium and stuff like that. They are important, but they are not that important, a large part of this thing. And then you know, solar panels, they might last up to 25 years, 18 25 years, but you know, to make them, they are not, it is not that sophisticated process as making microchips, but still you have to do chemical etching and all this kind of stuff to produce all this kind of these solar panels. And you know, you have sandstorms and whatever, and windstorms. You know, they're kind of nice aerodynamic surfaces. The wind comes in and lifts the whole panel up.
Yeah.
You know.
Yeah. That's right.
So the thing is that the of course the other aspect is that these resources vary from country to country. I know that Brazil has a lot of hydropower, right?
Yes.
You know,
Right.
United
70% for
how much?
for electricity. 70%.
Yeah, yeah,
More.
right. Yeah, yeah, that's good. Canada also is well endowed with hydropower.
Norway is strong too.
Yeah, Norway as well, and Iceland. In fact, you know, I lived in Vancouver, British Columbia, and it was always impressed because the bus system in British Columbia has these overhead wires, and it's run by BC Electric Company.
Uh-huh.
Okay, so that has been there for a very long time, and so on.
Yeah.
But anyway, these resources like wind and solar. I mean, in the United States, 25% of the energy from Washington, state of Washington, comes from hydropower, and 10 states produce about what did I wrote here? 80%. 80% of the hydropower comes from 10 different states in the United States. There are many states which have no hydropower at all. And
Uh-huh.
then 75% of the wind energy comes from also from 10 states. And there are different ones, North Dakota, Texas, and stuff like that. They have a lot of wind, but no hydro.
But this energy you are talking about, hydro, wind, solar, all of them are intermittent, and they need natural
wind,
gas to support the
hydro
fluctuation.
is not. Hydro is not.
Hydro, sometimes in Brazil, you have some crisis, and we
Yeah,
need
yeah,
to
yeah.
put
You do
natural
get
gas.
prices, but they are not nearly as intermittent as.
No, yeah. In terms,
yeah.
yeah, you are right. You are
But
right.
anyway, I mean, okay, the capacity factor for solar is around what 0.23. So 23% of the time you can get, you know, if you're running at the full capacity, what so-called nameplate capacity, you know. But you know they so yeah, I mean this is not going to work. This is not going to work, unfortunately.
Yeah, we talked about financial systems and the potential of crisis. We talked about energy potential crisis too. The second point. Let me bring the third point to
Yes.
talk a little bit about the armed conflicts in the world. We have
Yes.
nowadays 10 armed conflicts in the world, and we have Ukraine, you have Israel. Sometimes you have potential with Venezuela. Now something very clear. Taiwan is China and Taiwan's potential too. So
Well, it's the South China Sea where is the main thing there, because China is bullying all the other countries in the Philippines, Vietnam, and so forth.
And with
Yeah,
artificial islands, then so
yeah,
it's
yeah,
something very
yeah,
aggressive. So the point is the following. So this is a potential risk of an error of
yeah.
some big countries, and maybe an incident, and maybe something that can grow fast. How do you see the third factor in terms of
Yeah, I think it's completely unpredictable, because of exactly for that reason you say, that the the Ukrainian conflict could have been dissolved very at the very beginning.
yeah.
There was no reason. I mean, I looked at the terms which Russia gave to Ukraine, and they were quite reasonable.
Mhm.
And I'm very sensitive to this fact, because I'm from Finland originally. I'm actually a refugee, war refugee. Uh, but I mean, okay, that it sounds bad, but things were not that bad. We just left that part of the country where my family, my father and mother were living, and we moved to my father's hometown. Okay, so but the point is, I was born in that part of Finland, which is now Russia. Okay,
Oh.
but I was only a year and a half old when I left there. Okay, but the point is that the all during that period after the war, Finland had paid war reparations to Russia. So we had general strikes and stuff like that. People had to work, but no benefit for themselves, and so forth. And the thing is that the what saved Finland was that, as a result of this war and the era, Finland was not a very corrupt country at that time, unlike Ukraine. But Finland was basically a buffer state between Russia and the West,
Mhm.
and Finland had to bend to the Russian will, Russia's Kremlin's will, on a number of issues, and they did.
Mhm.
And into the international foreign relations vocabulary, they appeared a term called Finlandization, which means a country being in this kind of position as Finland was. But look, I mean, there are many important people who have said that that Ukraine should have become a buffer state,
Mhm.
but no, it was not accepted by the United States and Great Britain. You know,
And
so
the Israel situation is different. It seems that can be very fast solution. I'm not sure about that.
yeah, yeah. The thing is that there are these armed. Didn't we read about Houthis wanting to pass through Saudi Arabia to go fight there and so forth? Yeah, and all this shipping in the Red Sea now and so forth. Yeah, this can really, and this new technology with these drones and so forth. They are very
Impressive.
cheap, and you can cause a lot of havoc. For shipping.
Iranian, yeah, from Iran, I suppose.
Yeah, yeah, yeah.
Okay, and there is another point that's very complicated for my understanding about pandemics, new disease, and ineffective vaccines. So concerns about mutations that can make the current vaccines useless. So is this a topic that makes you think about? Is an
I
important
don't think
topic?
about it very much, really. I don't think about it very much. I think that these other things are more important and these, um, I mean, well, what worries me more is this technocratic institutions which have developed, like the World Health Organization. I mean, this is partially funded by Bill Gates. You know, I mean, what is this? These are private individuals and they are trying to impose some vaccine passports and so forth. I mean, this is supposed to go into effect in this March, a couple of months from now,
Yeah.
or maybe later. I can't remember exactly. Yeah, but this spring. But I mean, who gives a right to these people to act this way? And this World Economic Forum and so on, the same kind of thing. I don't worry about the pandemics as such. I mean, they're going to come and go, and And I mean, I know one thing which I learned very, very quickly during this pandemic is that, you know, it's kind of like the yearly flu shot. Is that, you know, they're guessing what kind of strain you have, and often these flu shots are not effective at all because the virus has mutated already. And
Yes.
then
Uh,
you should not be actually vaccinating during the pandemic because that puts selective pressure on the virus to mutate and mutate and mutate. Yeah, but I'm hoping actually somehow I think that that these mutations uh, again I'm kind of applying a thermodynamic principle that that they are more likely to be less effective the mutants than the original one
ah,
because of randomness.
uh-huh.
You know, that is if you do this gain of function research in the laboratory, you can create a deadly virus in the laboratory, but once it's open and starts mutating, my thinking is that the thermodynamics means that it's going to be less deadly in the future. So I don't know. I don't know, but the uh,
So we can consider this problem of pandemics 0% importance in this scenario, and the financial crisis may be 80% is more important one, and 20% for energy.
okay.
And uh,
I'll say about let's say 60-40 or something like that.
60-40.
Whatever,
And what's the
whatever.
probability? What's the probability to happen something in the financial systems? Is high probability? Is
I
70,
think
80?
I think it's yeah. I mean it's not a matter of if it's going to happen. It's a question of when it's going to happen.
Oh,
I think it's going to happen because this debt cannot grow forever,
mhm.
and so forth. So I think it's going to happen. We're going to have a crash, but nobody knows when. That's the trouble.
And there are other factors that could be analyzed. So cybersecurity problems, social inequality, uh, cost of living, so other. So if you could put all these factors together, the probability that we have I know that you mean when can something happen, but in the next year, next 5 years, what's the expectation
I
you have?
think that the well, okay. First of all, I'm fairly confident that this oil depletion issue is going to be here, uh, obvious to everybody in by 2030. So 6 years. Okay. Now the financial system, I don't know. It can happen at any time, you know. And the longer it goes, the worse it's going to be. Like all of these things, the longer we
Uh-huh.
go, the worse it's going to be. I don't worry about the what do you say that the you said cybersecurity and what else?
Cost of living, that's
Yeah,
increasing
those
very fast.
inequality. The inequality. This goes all the way back to 2,000 years. We'll never solve that problem. Unfortunately,
Uh-huh.
unfortunately, we can't solve
Yeah,
that
and
problem.
some geopolitical tension, but it's part of wars, and this is not a big issue. I suppose they can, let's see, keep these things in this control.
Well, that's what I was saying earlier. Is that the you know if this world trading system breaks down, and we start uh, using more local produce and stuff like that, I'm just that to me it's a good thing in the end because of we can get away from this materialistic society,
Yeah.
and that is the kind of the fundamental problem. And then uh, so I'm hoping that this decline is going to be very gradual, and but the important thing now is also is that how do the leaders locally in the
Yeah.
state and the government, where are they going to put their money? I mean, if you think about this, that the okay, coming back to the energy, what about this hydrogen business?
Yes.
You know, I mean, to me, this is a complete non-starter. and they have a green hydrogen, they have yellow, I mean, blue hydrogen, they have
All
turquoise
colors.
hydrogen and stuff like that. I actually had to look up what the difference between blue and green is. Green hydrogen is a hydrogen produced which is has no negative effect on
Yeah.
environment.
Yes.
Uh, that is, you can sequester the carbon dioxide.
Uh-huh.
Okay. Uh, no, no. Blue hydrogen, you sequester the carbon dioxide.
Blue.
Yeah.
Yeah.
And
For each color, you have a source.
Gray is one where you don't sequester it.
Yeah, but see, if you make hydrogen by coal, is a problem. By natural gas, is another cheap type of problem. So
This is
hydrogen
crazy.
is not a primary energy. It's not an energy
Yeah,
source. It's
right. I mean, but why are people investing money on it?
yeah.
And this is the important thing, is that we have, societies have to be very careful of where they invest their money, because the money cannot be put into wrong places right now.
Let's go to the conclusions. My
All right.
point for the conclusions is the following: how do you expect the leaders of the world treat this challenge?
They can't. They are like I told you before. We have come to dead ends. The societies have developed so far that we are completely kind of like in a prison. We cannot move. I mean, where can what can I do if I don't get my pension? What am I gonna do? You know, I mean, the people who work on a job, what can they do? They're stuck in that job. They can't shift.
Can't do anything.
And so same thing for the leaders. They don't know what to do.
And what type of leaders we have? No.
Yeah, well, that's the problem. Yeah, well, this is another aspect which has plagued our country for, I mean, the whole world, the Western world, for the last 20 years already.
Yes, that's right.
I mean, we've gone completely on the wrong track.
Yeah, that's right.
Well,
Yeah, well, it was great conversation, Professor Seppo Corpella. It's a great pleasure every time that we talk. For me, it's a class.
thank you. Yeah. Well, it's enjoy your podcast here. Many of them. Yeah. Yeah.
Thank you.
You have good guests in there.
Perfect.
Okay.
So have a good day, good evening.
Thank you. Thank you very much.
Thank you. Bye
We'll be
bye.
in touch. Yeah. Bye bye.
You'll be in touch for sure.
Yeah.
Thank you.
Yeah.